So, good morning, afternoon, or evening. Not sure what it is for
It's
people,
night.
but good morning to everyone.
Yeah.
First of all, I want to thank you all for being here. Whether you're an experienced trader or just someone still finding their footing, I appreciate you taking the time to listen. So, today I want to share my journey in trading, some of the lessons I've learned, and how I've over time refined my approach, specifically using DTT nowadays. This helps me create a structured and gives me a statistical edge in the market. So, we'll discuss my transition from options trading originally to futures trading and the importance of slow, steady growth is is essentially what I learned over time. Then, how I use DTT and incorporate it into my own trading, as well as open, hollow, close candles, and how I'm able to frame my directional bias for intraday trading. So, let's dive in. From options trading to futures, I started about 7 years ago, originally with options trading. I didn't really find profitability until 3 years in. Takes a while. And like many traders, I started with options trading. The appeal to me was obvious, right? You have this high leverage. You don't require a lot of capital. I could put $100 in, perhaps make a lot, and the potential for quick returns because options move very quickly. But with that came the reality, right? So time decay, which is a Greek, it worked against me. If the option was expiring, it lost value. And the directional bias was harder to manage because the premiums. Overall, this forced me to rethink everything, my approach. I realized although I'm still slightly profitable with options, I need something more structured, something that doesn't fight against me with the time, and that I can simply just look for on an intraday bias, right? That's why I transitioned to futures trading. So here I am trading futures contract nowadays, live accounts, funded accounts, etc. For me, futures offer cleaner price action, so they have extended hours, and we can understand more of what price is trying to do overnight. This gives us more data on the chart. So for me, this was pretty much all I wanted, right? And at that point, they also offer not much slippage issues like options do, right? You have a lot of liquidity because a lot of people trade futures, institutions as well. This also gave me consistency because now I have the time factor on my side. I can simply be patient and not necessarily have to worry about an option expiring. Even then, as I approached this going into the 6th year, 7th year, I still needed a system that aligns with who I am personally. So I'm a pretty patient person. I don't rely on gut feelings or randomness and subjectivity, right? I want to essentially make it really logical. I like logic. And that's when, for me, DTT started taking shape for me. This takes away the personal bias, the feelings that I have of where I might go, and it just tells me exactly what to look for. So slow and steady, I built a long-term edge using this. And the biggest lesson I learned over time is slow and steady always wins the race. Slow and steady always wins the race. If you try to go quick with trading, you'll get burnt. So if you're looking for trading to stick around in your life for a long time, take it very slow. Slow and steady always wins. Early on, I saw traders in my early days or even nowadays, I still see them chasing huge wins, right? Well, that could work a few times. Other times it might blow accounts. And so that repeats the cycle. I've been there too in the early days with option trading, but the real power in trading isn't in one big, huge trade that changes your life, right? It's over time consistency, day in, day out. So what I learned and my advice is focus on the quality of the trades, not the quantity. So if you just take one, three high quality trades a day, it beats over trading 10, 15 low quality setups. Another thing I learned was control your emotions. So the moment you start chasing trades, you lose control already. The market won. It beat you. So you want to essentially stay patient. And that's what DTT does for me. It helps me wait for the perfect setup and refines it for me further. Now that I've introduced who I am as a trader, my journey, I want to talk more about my framework, DTT, and how it offers to me my bias for the day and what I look for.
So for someone
So I'm
who
going to turn
doesn't
this
know
on.
what like DTT is, can you explain what DTT in definition and maybe like what is going behind DTT? And then we can just get started with everything.
Sure thing.
Yeah.
For DTT, it's built on the principle that markets move in a
Okay.
structured time-based model. And so I looked at data consistently, and to me, it simply just means that at specific times, I'm looking for volatility to inject.
Okay, perfect.
And
It's like
also,
completely
we're
based
look
on data.
perfect. Yes,
Yeah.
exactly.
Right.
And so one of the most powerful tools nowadays that I like to use with DTT is it's called AMRP. It's just the average range of what price can move at a specific time. Why
Okay.
is that important? Because if I'm looking at a statistical range, everyone can see the chart, correct?
Yes, sir. It's yeah.
So if I have this statistical range that draws automatically and we're entering price here, I know that statistically this is where price should go and how far down it should go. So if I'm looking for longs, I'm simply just going to wait for price to go here. Once my entry model pops up, I'm in the trade and I try to take it to the opposite side or just some liquidity pool. Make sense?
Yes, sir.
Same thing if I'm short, if I want to look for shorts, I'm waiting for price to go up here. Because on the contrary, if I want to short and price is down here, the statistics is telling me that it's in discount. So there's no reason for me to short down here. Essentially, I'm going against what data is telling me. I need to wait for price to at least go up here for me to short. And so that's why for me it's very important and vital what I use.
So you
I
consider
know
all
how
those
far price
data ranges as manipulation zones.
essentially, yes. So
Yes.
think of it as one big zone
Mm,
that is not based on human thoughts, human emotions. It's based on pure data.
right.
So, and I'll show you a few examples
Yeah, sure.
of this happening throughout the week. So let's get to it. Who's ready?
Yes, sir.
So these blue zones, I've already marked them. They are part of the indicator. It marks it automatically. We can look at a few and I'll show you guys exactly what I mean. We'll just start off with the week here. Like I mentioned, each zone offers a discount and premium. And if we go back in time, you'll see what I mean. Before price even develops, it automatically turns on. So boom, there you go. At this time exactly, it already plotted on the chart. Now, what I'm thinking and what I'm looking for is price has been bullish throughout the week. I might wait for price to distribute back down if it can to this area here. If it can't, then I can go to the lower time frame models. Totally fine, right? Totally
Yes.
okay. This is the higher time frame. However, if I'm looking for shorts because, we took out some higher time frame liquidity up here, previous weekly high, then I wouldn't really be looking for longs at that point. Because if I'm looking for longs above, as I mentioned, AMRP, this is exactly what can happen. So it's a statistical edge for me. If I'm looking for longs, I might just wait for it to come all the way back down. Because I know when I'm looking for longs and I'm buying up here, I'm buying at a premium. It's kind of like going to your favorite store, right? And you want this piece of cake or candy, and it's not sure the currency where everyone is from, but let's say it's $5 and that's a pretty cheap piece of cake, right?
Yeah.
And you love cake.
It's kind of expensive here though.
But
Yeah,
right,
let's go. Yeah,
right.
yeah.
Um,
Yeah,
something
let's go
like
with the
that,
same.
right?
Yeah, sure,
Trying to
sure, sure.
paint the
Uh-huh.
picture. And then you come back to the store the next day, and instead of being $5, it's $30 for a piece of cake. Would you buy that piece of cake?
No,
No, right?
no.
So everyone in the chat I'm asking you as well, everyone listening, would you buy that $30 piece of cake? No, right? You'd wait for it to become $5. And that's essentially what I do on a daily basis. When I'm using AMRP for my statistical zone, I wait for price to come to discount. And so we can already see a few examples here. Then discount, 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 and then premium. So now that we understand this, we can look at the lower time frames as well, and it's the exact same framework. Intraday as well. So we can go to this previous day here. We'll examine that.
I guess the charts are stuck. Like it's not loading for me.
Let me see if you can see the lower time frame. Are you able to see that now?
No, this screen is charts loading. Yes.
Okay, perfect.
No, no, no.
So you
It's
see
like
it's the same thing on the
it's buffering. Can you like close the charts and maybe share it once again? It's kind of buffering.
no worries. There we go. So I just re-uploaded.
Minutes.
How about now?
Yeah, perfect. It's at 5 minute time frame,
Perfect.
right?
So now this is yeah, so this is
Yeah.
the lower time frame now. We're on the 5 minute. And as you guys can see, it's the same idea. If I'm trading, scalping intraday, I'm looking for shorts in this area, longs below here, shorts here, shorts here, longs here. And that's simply it. This is just one part of DTT, right?
Mm.
I also use root candles and the previous model range. We can get more into that later. But what this does for me is just it eliminates guesswork, right? I'm not really guessing how far price should go. I'm literally just plotting this on and saying, okay, instead of hoping price will reverse here, I'm using data to drive my expectations so I can position myself correctly. And what I look for is if price extends past AMRP on the buy side, I know it's in a premium, so it's likely to revert back. If it extends the discount, I know it's in discount. So for me to short down here, it's a big no-no. I wait for price to come all the way back up, if anything. And that's essentially what I do when it comes to the indicator. Now, for my directional bias, I simply just look at the candles. So we'll go through that and we'll go through the week and I'll show you guys exactly what I look for. All right. So when it comes to the candles, now that we understand I have my zones, so I look for longs or shorts at specific areas. Now I'm looking for directional bias, right? I'm looking at the candles, I'm trying to read them, and I'm trying to understand, are there buyers? Are there sellers? Where is my direction? Where should I be targeting? And this is actually very simple. So depending on the time frame you're observing, it could be the 4 hour, the 15 minute if you're a scalper. We can even look at that. All I need to do is understand the higher time frame. And I simply just look at a couple things. I look at liquidity pools and then the candles and how they close. So let's mark this out. You don't need much beyond this, right? We're not having 50 drawings on here, etc. The more you keep it simple, the easier it is. So if I'm looking and observing this, I notice that all these lows got left behind. Should I be targeting them? Not necessarily. Right now, price is on a bullish trend, taking out highs. And second of all, it's leaving lows behind. It's not interested in heading back down there. It's more interested in pushing back up. Knowing this is step one. I just look at liquidity and I see our lows getting taken out or our highs getting taken out. In this case, highs are getting taken out. Next step, I just read the candles. So if I'm trading intraday, I'm a New York session trader. I like to understand what price is doing on the bodies. So actually want to go over this day specifically. Not sure who traded Wednesday, February 5th, but this was a very interesting day
Yeah.
if you were trading, because I could sit here and just tell you that it's going to perfectly go like this every time. It's going to look like this. It's going to be picture perfect, right? You're going to get beautiful candles all the time. But the reality is in trading, we all know that's not true. You're going to get some really nasty candles sometimes. And so if we go back to Wednesday here, how do you deal with that? This right here. What I like to do when price is taking wicks on both sides and it's not really helping me understand the directional bias, I just go up a time frame. So I go to the hourly or the 4 hour. And as we can see here, I'm looking at the bodies. Now the next question is, what specifically am I looking at with the bodies? I'm looking at the previous highs in this case, and I'm seeing that the bodies are closing higher. I'm looking at this high, the body is closing higher. Understanding this, I can keep my directional bias pretty simple. I am then looking for longs. Once we got past all these nasty candles here, I'm then looking for longs up into these smooth highs up here. So now that we understand that, let's backtrack a little bit. This is a live trade I took and posted online where I simply didn't engage with price in this entire price action here. For me, there was no bias. And sometimes you just simply have to sit out and you can't really trade every single candle, right? It's just impossible. You're going to get burnt eventually. So if you stay patient, you wait it out, price will tell you where it wants to go. In this case, after the 10 a.m. candle close, if everyone's following along, just give me a quick one in the chat so I know I'm doing a good job and I'm making this clear. I want to make sure everyone's still following along. We went through essentially who I am as a trader, my framework, and now we're going through the candles, which gives me my directional bias. Then I'll show you how everything comes together in this one trade right here that I took on this specific day. Perfect. So we have a lot of ones. So now that we understand all this, I'm looking where the lows were taken. No lows were taken. All this sell side is left alone, and we have smooth edges on top. It's so simple. At that point, I then read the candles. As we can see here, we did a beautiful 1 hour reversal right there. Now that price is giving me a proper direction. We're consistently closing above the previous candle highs. I am then going to jump into the lower time frame and see if I can find an entry. That is where DTT helps me. So if we go to the lower time frame, this is the hourly. Let's proceed to the 1 minute chart now. And I'll show you guys the trade I took on this specific day. So if we go to the lower time frame here, we'll start to see that it's really interesting, correct? We have these lows being left behind. As I mentioned, we're taking out this high. How do you navigate this? Yes, I might understand that price is bullish and it's likely going to tap these highs up here, but I'll show you guys what helps me navigate it better. We have our AMRP zones. As I mentioned much earlier, as we can see here, it's in premium in this time slot from 10:20 a.m. to 11:10 a.m. Now the same idea presents itself. Think of it as a piece of cake again. If it's $30, I'm not going to buy this piece of cake. I want it to be $5 and give me a discount. That's the beauty of DTT because I can simply wait for the next time slot. So as we approach 11:10 a.m., I have some new statistical zones. All I need to do at that point is wait for price to come to me and look for a long right there. At this point, I'm using one of my price models that I like to look for. I either soup lows or I use inversion for value gaps. So I'm either looking for reversals at internal liquidity. I'm looking for buying pressure here. Or if I got a late entry, I'm looking for an inversion, right? On this day specifically, I took a long on the 11:21 a.m. candle, so this candle here. Now, some might be asking, why didn't you take a long on this candle here, etc.? That's because everyone's still following along, right? So I'm in discount. I know the higher time frame. I'm looking for an entry at this point. It's the last step in my routine. So I do 3 steps throughout the day. I look for where I am in premium and discount with the indicator. Then I look for directional bias using the candles. Then last but not least, I look for my entry and I look for my entry criteria. As I mentioned, I use soups or I use inversion for value gaps. In this example here on this trade, I took a turtle soup up into this high right here. If I left it running, well, it would have been really great, right? Sometimes you get expansions like that. But you can see how useful it is. Now the question might be, well, why did you enter on that candle and not the next one? And the idea is we have to go to the 5-minute time frame. When price is retracing back down, I simply have to wait for this candle to close. It's something I always wait for. I wait for candle closures. Even though I'm on the 1 minute looking for an entry, I wait for the 5 or the 15 to close because I want to get on the manipulation of the next candle. So if this candle is doing its job, it's proceeding back down to this internal liquidity pool. I simply want to wait until this candle closes. Perfect. Then I get in on the next candle, in this case, this 5-minute candle, and I hop in the trade. Make sense? So you can see how everything comes together perfectly. And I do this day in, day out. I start my day by observing where we are in premium and discount. I then use one of my models, either a soup or an inversion. If I'm too late to the trade, for example, we can go back here on this day. If I'm too late for perhaps a soup entry or catching the top, an inversion is always going to happen, even on the lower time frame. So, for example, if it goes step by step, if we take highs or lows, the first thing that's going to happen is you get a liquidity sweep. Next step, you might get a change in the state of delivery, but there's always going to be an inversion. So, if I miss my initial entry when it comes to price, I then look for an inversion as my second entry if I miss the first one. So, to answer everything together, I simply look at the OHLC candles. If price closes bullish, I'm expecting a continuation. Price closes bearish, I'm expecting a retracement or further downside. And I'm just confirming my bias with the candles and the indicator as well. That's it. So it's very simple. I simply just look at that day in, day out. And trading at the end of the day is not about being right on every trade. It's impossible, right? It's about having my goal, at least for me, is to have a structured approach, no emotions, and I'm still gearing towards that. I have something new that I'm going to give in the community, but I'm looking for more of a logical, structured approach, no emotions attached, that mechanically allows me to be profitable over time. And so for me, DTT offers that to me. It gives me discount and premium. And what you'll see, they all work together to simplify my trading decisions. At the end of the day, I want a simple mechanical system that's based on structure and logic and no emotions. And so the key takeaways of what I'm mentioning today: slow and steady always wins. Don't chase, just keep refining your edge. I personally use DTT and what I just showed you, and that's it. Nothing else. Keep it simple. Look for logic, look for an objective framework. Don't focus on emotions or what you think price might do. Try to make it more mechanical, right? That's the biggest advice I can give. And at the end of the day, it's not about guessing. It's about following a logical process. So I'd say by applying these concepts, you can easily build a repeatable strategy. And thank you all for taking the time to listen. My goal is not just to trade, but to help others that are starting their journey to gain clarity in the markets. And for those that want to dive deeper into DTT, well, you can always send a message in the chat. You can ask about my trading framework. You can also check out Twitter profile, but I leave it up to you guys. Just continue refining, learning, and trading with logic over any emotions. So if there's any questions, I'd be happy to answer them.
A great session. And like the things or signatures you look for in market is almost the same I look for. Candle closures. And even for entries, I consider candle closures. My entry model is basically when if I'm looking for bearish, right? So it would be when the present candle closes below the previous candle. I would look for entries in 1 minute and 3 minute time frames, and the same H1, H4, and H6 I use as an intermediate time frame to frame the daily sessions price. It's like very similar to what I trade, and the addition which you are having is the DDT, the data. That's it.
Exactly. It's my opinion, gives me my edge, right?
Right, right. Yeah,
If I didn't have this on, it could be a decent way to trade if I'm just
yeah.
looking at the candles
Mm.
and etc. But when I have this on, it makes it much easier. I know, okay, I should probably be careful if I were to zoom in, for example,
Mm.
and saw this fair value gap here on Asia Open.
Mm.
Some people probably tried longing that. Who knows? I can't say for sure.
Sure.
But me seeing this in premium of, well, AMRP and DTT,
Mm.
I'm going to stay away and be like, okay, I'm going to at least wait for it to come back into this range here. And so that's simply what I wait for. I can also use my root candles, which is a separate topic for
Okay,
entry,
someone
as we
has
can see
asked the
there.
same. Someone has asked a question about root candles here. Would you still use root candles while trading?
Oh, definitely. It's a whole separate topic, but I use root candles every single day. To me, they are also premium discount relative to this time, for example, and they become support and resistance in a way for me. If it breaks above, great. I will look for it to support. Point being, if I just turn off AMRP here for a second, you'll see how it used them throughout the week. These are the root candles. Price closed above. It repriced back down to the root.
So like it
Beautiful buying
prints.
pressure.
So it prints in future, or like once the data farms, it eventually prints, or it's like leading indicator. It prints at the open itself, the session open.
So the root candles, they
Mm.
print once the candle is confirmed and closed.
Okay, okay, done.
So that's how it works. AMRP,
Mm.
it draws beforehand. So as I mentioned, before you even approach the market,
Mm.
for example, here, it's already on the chart. So you already know, okay, I'm looking for longs here.
Mm.
I'm looking for shorts up here.
Perfect.
If there's ever an overextension like that,
Mm.
it's even better because sometimes it's like a slingshot, like a rubber band. It just
Mm.
comes immediately straight back. And I can actually show you guys an example of what we looked for on the live session. Let's see, yesterday. So take this for example, right?
Mm.
This move here. Now it might look really great for this liquidity pool, for example, if you're looking at the 5 minute as well. So to the average person, it might look decent, right? Oh, we have this high here. It's looking pretty strong. We got a fair value gap. I'm going to look for a long there. Looks like it's respecting it. I'm expecting this high to get taken out. But what I'm seeing instead is this. So if we just go back here, what I'm seeing is with DTT, we turn this on. It's the same thing. It's in premium. So you see how it's overextended? If I'm looking for longs, I'm basically buying that piece of cake at like $40, $50. Way too expensive, right?
Mm.
So either I'm going to short up here or I'm going to wait for it to come all the way back down because it's against my system if I'm going to long up here. And so, as I like to mention, what happens when you try longing in a premium of AMRP? This is exactly what happens here. Comes straight back down and taps the discount.
Mm.
So I hope that brought more clarity as to what I look for,
So I have
essentially.
another question. Like there are sessions, right? I can see a lot of sessions, and we can like I can clearly see that there are a lot of DTT, like AMRPs plus and minus, right? So can we extend the previous session's range to the present session and use that as well?
Oh, so you're talking about the daily profile?
Yeah,
Aside from DTT, right?
right. Like I'm asking about the DTT, the manipulation zones you
Oh,
told.
so you're talking about this range.
Yes, exactly.
Definitely. So it's a delayed reaction. So
Mm, mm.
for example, this is something I've gone in with on you can find videos on YouTube,
Yeah, sure.
right?
Mm,
It's on my YouTube, but this is exactly what Dr. Matrix is referencing here
mm,
is a delayed reaction to this zone here, manipulation zone.
right.
So it's going into premium, it snaps back, and it's a delayed reaction to this area here. This happens quite frequently. So you can still utilize them.
Mm,
For example, this zone here,
mm.
we're in premium of that. This was NFP. You
Yes.
can see how it stayed within that range right there. So this is a delayed move.
Mm,
I hope that answered the question.
yes, sir. Yes, sir. So, what would it be your a management of trades? Like, do you usually take partials, or you just leave your trades to hit your full TP, SLTP, or you'll? I've seen that you're taking partials in your execution videos, but for the sake of other people who might now not seen your videos, like, what would be your trade management on a trade? Maybe you can use a example of trade which you took this week.
Oh yeah, for sure.
Mm,
So for example, if we look at that trade, I think you guys can see that I took a partial, right?
mm,
Now on my funded accounts, I don't take partials. Why? I'm just letting the trade run. These are funded accounts. These are not real accounts. So you can make money off of them, but
mm,
I'm more inclined to just let a position run or hit full TP, right? I'm not looking for partials because I'm not expecting this account to stay with me forever. Now, on the other hand, for the live account, which I use in the live trading sessions for everyone, I might take partials because of several conditions. For example, this week was NFP.
mm,
We all know how NFP weeks can be. Sometimes there's tricky, slimy situations that you can get stuck in. And so you might want to take partials to secure some profits, right?
mm,
That's number one.
mm,
Number two, this is a trading account I'm using in front of everyone.
mm,
And so we're just building this account slowly. This is a whole separate topic, but it's not a funded account. So I'm not going for full TPs at times, sometimes. And that's because I'm just looking for percent returns on this account. So I'm looking for 2% on the day, 4% on the day if I can. And I'm not losing more than 2% on the day. I just come back the next day.
mm.
That's the whole idea behind if I'm taking partials, it's likely because I'm trading a live account. If I'm not taking partials, it's probably because I'm on a funded. Sometimes I will let price hit the full TP on the live account, depending if the trade is looking really good,
Mm.
right?
Based over the
So we can
conditions.
go over this.
Mm.
Yeah. So based on the conditions, essentially. So let's see if I can show the executions there. Should still be on there. Looks like it's the end of the week, so they might have taken it off. But you guys can check it on Twitter. We took that on this account here. Should be,
I
let's
guess
see.
it was like 2 micro longs, if I'm not wrong.
That's, yeah, I think I'm on the mini
Uh,
contract. So let's
oh, sorry,
get
sorry.
rid of that.
That's okay.
I was like, why is it not showing up? There it is.
Yeah,
So
I
that
saw
was
it was like
Wednesday.
two contract longs. I saw the video.
Yeah, so here we go. Yeah, so
Yeah.
there it is.
Ah. Mm,
So this is the entry, right?
mm,
And as I explained to you guys the entire idea behind the entry, I waited for the hourly to be bullish.
mm,
I simply avoided all this price action. I took two contracts here and I rode them all the way up, at least into this high. I took a partial halfway because it's NFP and I wanted to secure some profit. It was about halfway. If I wanted to let it run, which I might start doing in the future on this account, it would have been really nice. But as I mentioned, there's several conditions I look at. Is price action being really clean on the day, for example?
Mm.
The entire morning, it's separate. It's totally different, right? Right now, we're looking at it in hindsight.
Yeah.
I'm looking at it, I'm like, oh, shoot, I should have let that thing keep going.
Mm.
Because you're like, oh, I should have let it keep going to the buy side, right?
Mm.
But when you're trading that day, you're looking at the conditions and you're saying, okay, price has been choppy. It's been quite a mess in the morning. I secured a pretty nice entry, but it could be just like this and it could come back down. I'm going to take one partial and let the other one run. That's the idea behind it. It's right now, it looks like perfect hindsight. I should have left it run, but the whole idea is that I'm trying to protect myself because under this condition,
It's not
it
favorable
could
for
have
you.
been easily
Mm.
just like this.
Mm.
It's not too favorable, right?
Mm.
So if it's favorable conditions and price is very fluid, clean, precise, then I'm going to let the position run. So it's really that simple.
Okay. So if someone has to purchase your indicator, where someone could purchase it, where it would be available for someone's access. Rajmani is asking, shall I take this indicator and use it for my own model for validation purpose? If someone has to get your indicator, hands on your indicator, like where someone could get it. It is from 2 degree, if I'm not wrong. I have my access from 2 degree.
Yeah, it's from 2 degrees, but I think
Mm.
there's a link here or something.
Like perfect. We'll just spin this.
But it's great. I mean, it intertwines, right? If you have your own price model,
Mm.
so if you're using change in the state of delivery or something else,
Mm.
just as I use soups or inversions, I'm simply using the indicator to help me understand where I want to long and where I want to short. So if we go back here, we'll see how that's being utilized, where I want to long and where I might want to short or long as well. And so if you have your own price model, that's all you need to wait for. It's just for your price model to kick in at those specific areas.
Mm. So someone is asking as if
Since it's
as is
data-based,
yeah.
oh, perfect. Yeah, so since it's data-based, the indicator automatically plots it on. So if you guys want me to go to a different ticker symbol, I can. You can go on crude oil. It'll be the same thing. Because what it does, it grabs historical data from the chart and it uses that to calculate it. So here we have crude oil. If you guys want forex, I can go on forex too. Same thing, right? So automatically plots it on the chart for you. So are there any other questions? This has been very fun. I hope it's been insightful.
Yeah, very,
If
very
you
insightful.
guys love this, let me know. I hope I presented this in an appropriate way and it was insightful for everyone.
It was very clean though, very, very, very much thanks for the presentation right here. It was very concise and very clean. So if someone has any doubts, you can like ask us. Maybe he'll be staying for next couple of minutes. If there is no doubts, then we'll end this session.
Perfect.
And I'm gonna attach the links for his profiles and everything and an announcement right once the stream is done, so that if you want something, you can just go reference to the links.
Perfect. Sounds great. Of
Yes, sir.
course, guys. I hope this was an insight into how I trade, right? It's
Yeah.
just risk management based off data
Mm.
at the end of the day. My pleasure. It was great to be here. So thanks for the love.
Yeah, it was a great session indeed. I'll just have a screenshot of the session.
Yeah, the time range is different. So it's different sizes for each asset class because we're looking at historical data based on that instrument. So if I'm looking at euro, it's that. If I'm looking at gold, for example, gold futures, the size will be different because it's calculated differently based on the chart. As we can see here, this is gold.
It looks very, very clean and obvious in gold, it seems. Better than in Q. Right?
Right? And Q is
Yeah.
pretty volatile, so that's probably why.
It has turned volatile after Trump's and all. Before that, it was like very, very
Oh
clean.
yeah,
Yeah,
I agree.
very tough conditions.
Yep, crypto too. We can look at the Bitcoin. So here's Bitcoin. We'll just let it load. There you go. Discount and the time too. So time is pretty important for DTT. You can see the pivot times there.
Hmm. Can you just type in Nifty? NIFTY? NIFTY. Right. This market is completely retarded. Let's see. Yeah, damn.
This
It's
one might be a
expected.
little off because of that.
Uh-huh.
I think there's
The
different
time
time
and
filters,
time
right?
frames, yeah. It's Indian index.
RTH.
Yeah. This is the complete RTH. And this is the Indian index.
All right. So any other questions here?
Is there anything else, guys? If there is something you could answer, and if there isn't anything, then we'll just end off the stream.
Yep. It works for swing trading too. So DTT, that's a great question. It's not just for intraday trading, swing trading, also for investments soon to be. We have the yearly indicator hopefully soon coming out. But in the original book, which came out last year, it talked about that. It's what type of trader you want to be. Do you want to be a scalper? Do you want to be a swing trader? Or do you want to be an investor? DTT does it all for you. So this is essentially if you want to swing trade the S&P, for example, I can look for this to be in discount. I enter long at New York Open, right around there, 10 a.m. candle, and I let my position run perhaps overnight if I want, and I manage it accordingly. So if it goes in a premium, I might take profit. If it goes back, I might add to my position and let it run further as we proceed into the week, right? That's the whole idea behind it. You can do this with any week. So if I backtrack just 1 week here, same idea. I'm waiting
Mm.
for it to go into discount. This was a beautiful buy because it was super deep in discount after this volatile drop. You guys remember that? This was on Monday, January 27th. And the injection of time, you can see how it reversed at that time. So you can do all kinds of swing trades. I'll leave it up to you guys to explore that, but there's plenty of videos on the YouTube as well,
Yes, sir.
resources there. So, yep, these are based on a time filter.
Perfect. So is there anything else, guys, or else we'll just end up the stream? It's been an hour almost. 45 minutes almost. It's Kolkata. There. UTC plus 5:30.
Yeah, so it still works. You can have it on the time here. It's not
Mm,
gonna, because it goes based off New York time, so
mm.
it'll still pan out accordingly. But when it comes to DTT, it's fixed time slot. So for example, on this weekly model, it's
Mm.
fixed on this time to this time. That's just based off data from what I worked on past couple of years, right? All right, so this has been great. I
Yeah, sir.
appreciate everyone's time.
Yeah,
Thank you for
same for you,
listening.
sir. Mm.
Thank you for being here,
Thank you for
and
the
I hope
stream as
everyone
well.
enjoys their weekend.
Yes, sir. Same to you.
Anytime, of course.
Yeah. Yeah. Thank you for the stream, bro. It's been a great time having you here, and we hope to have you here again soon if possible.
Of course, yeah, anytime.
Yeah. Sir. Thank you for the stream. It was really amazing, and thanks for all those who joined. It's been late night here, but still, thanks for everyone who has joined. And yeah, bro, we'll end the stream right here. I just upload the file and drive, and I will send you, and we'll discuss there the DMs.
Okay, great.
Yeah. Thank you.
Perfect.
Thank you. Yeah. Perfect.
Talk
Perfect.
soon.
Nah, sure. Bye. Bye. Bye, guys.
All right. Bye bye, everyone. God bless.
God bless you. Sir.